Guys, welcome to Everything Money Plus channel, our video today. I hope we're still around tomorrow because Trump has announced that he is going to wipe out an entire nation tonight, potentially, which is an insane statement. I do not like that statement. I don't care what side of the aisle you're on. That is a terrible statement to make publicly. Who knows? Maybe I'm wrong. Maybe it'll end up being okay, but that is absolute insanity. I shared something on my Instagram, like I said before, about Mamdani in New York saying, hey guys, things are not going well here. We're just going to raise taxes on just a few people who are very wealthy, who have enough anyhow. I don't know if anybody knows the definition of that, but I will let you figure that one out. Guys, this is not a political statement. I know some of my reactions will be political, but if the cost to own something, cost to live somewhere is really high, what do people do? They're going to leave, they're going to sell it, etc. Okay, market's down today. It's been up and down. I think at one point the NASDAQ was down almost 2%. Now it's down 0.57. Bitcoin is down to 68.46. Gold is up to 4,700. All right, Dow is being led by Nike. Guys, I want to talk about Nike. It's a company that I own. Don't own a company just because I or anybody else in the world owns it. You know, a few of my friends were in a group chat the other day saying, Paul, Nike is dying and all that stuff. I'm like, okay. So I asked them a quick question. I said, do you think Nike will be around 20 or 30 years from now? And the one guy said, yeah, I do. I said, okay, do you think its profit will be higher or lower 20 or 30 years from now? He said, I got to imagine it'll be higher, but it won't be as high as it could be. I'm like, okay, but will it be higher? He said, yeah. I said, okay. So the only question is, can you buy it for a reasonable price today? That's my thesis on pretty much every company. Now, you might sit there and say it's too simple. Bingo. The hard part is determining what that profit will be 20 or 30 years from now. And I'm going to be wrong on some companies. But the point is, I actually believe in having 20, 30, 40 companies in my portfolio. Because what I'm trying to do is buy really big companies and buy the mispriced ones as they're undervalued consistently. Kind of like dollar cost averaging into my biggest difference between price and value, where value is much lower than price. If I'm able to do that on very large companies, my guess is I'll probably do okay. How okay? Well, I don't know. I mean, I'd like to think that I'm going to beat the market by a few percentage points a year, which I did not consistently. I did it over a 15, 20-year period of time leading up to COVID. Since COVID, I've absolutely trailed the market. I'm okay with that. In fact, we did a video on wasn't the main channel or this channel, Tim, where the guy said that I beat the market last year, and I said no. Our main channel, a guy who on the internet, who I liked his video, but I use it as a learning lesson. He came out and said, Paul beat the market last year, he made 22%. And I was like, no, I didn't. I made 15% last year. I lagged the market. That's the kind of authenticity I want you guys to see in me. Like, that wasn't me going, oh my God, I got to admit that I lost to the market. No. My goal is that I outperform the markets here or there, and the companies I buy consistently do well. If I'm able to do that, I will likely do well in the long run. The advantage I think I have, because a lot of people think they can beat the market. And I always tell people, like, you think you can. The advantage I have is when a stock is massively lower, I'm the guy buying it. Look at Nike. It was at $180 a share. When we had this channel, we made videos saying we weren't even interested in looking at it till 100. And people were like, oh, you're crazy. You're stupid. It'll never go down that far. Okay. Now it's at 42. You're crazy. You're stupid. And Nike's done. Okay. Adobe's done. AI's okay. Fine. PayPal's done. Okay. Southwest is okay. It has to be that way for me to buy a cheap stock. I have the ability to buy those. I also buy low-cost ETFs. This is all part of that conversation. But anyways, Nike. Guys, my thesis on Nike is exactly what I said. What world do we live in 20, 30 years from now if Nike's not around? Somebody said to me in a post on Twitter, and by the way, if you want to follow me on Twitter, @EMPaulG, I'm fairly active on there. He said, there are thousands of competitors to Nike. I was like, what the fuck are you talking about? There's not thousands of competitors to Nike. If I went to a group of people, 100 people on the street, and say, who do you think the number one sports brand in the world is? What percent would say Nike? That's the question I have. Even if it's 40%, that's a huge number. But I think it's more than 40%. Okay, so I look at that saying, okay, well, with that in mind, they're in turnaround right now. Do I think their revenue will be higher 20 years from now or lower than today? I got to think higher. Inflation, turning the business around, getting it better. So therefore, do I think the profit will be higher? Yes, I do. So what price can I pay today that makes it a great investment? Now, what people confuse is it's not going to grow as much as we thought it was. So therefore, it's dying. No. if I was expecting, you were expecting 7% revenue growth and now you're expecting 4, you think, oh my God. Well, it's oh my God if you have no margin of safety. It's oh my God if you made the best possible assumptions you could and then you revised them. That's oh my God. And you bought it on the best possible assumptions. We think a lot of stocks right now are priced for the best possible assumptions. For Nike, guys, literally $180 a share, $179.10, a mere 4 years and 5 months ago. $179.10. That's unbelievable. Now, let's look at analysts, think what they say. And I'm not saying that analysts know everything, but they have Nike revenue growing, not a ton, between 3 and 6% a year. And they have earnings per share growing. I just look at this saying, I think Nike will figure out a turnaround. I think they got a great brand. They got a lot of great athletes. Yes, are athletes signing with their companies? Absolutely. China's got some good companies coming out there. I get that. Puma's taking people. But Nike still has LeBron. Nike still has Jordan. Nike has Kyrie. Nike has Kobe still. I look at these things thinking, all right, I mean, yes, it's all in basketball. There's a lot of running companies out there, but listen, I don't know. I don't think it's going to be obliterated from this earth is my point, like Trump might do to a certain country tonight. I just look at it as like, okay, I look at this thinking, this looks like opportunity for me when the story does change. I mean, look at a company like Intel. Intel was $17 a share exactly exactly a year ago tomorrow. It is now at $52.58. Guys, this does not mean that Intel is back. It just means that the momentum got in there, people started buying more of it and went up. This is the point of investing. It's not a short-term price movement game. But for Nike, guys, I don't know I can't predict the future, but I will say this. If I pull up my assumptions about Nike, and I don't think my assumptions are egregious, 10-year analysis, 2.5%, 4.5%, and 6.5% revenue growth. Profit margin and free cash flow of 9%, 10%, and 11%. So staying the same as it always has been. PE of 19, 22, and 25, and then my market return for intrinsic value of 9%. Got to change that to 9. I hit the analyze button. The stock's currently at $42 a share. This is why I'm interested. I have a low price of 48, a high price of 96, middle price of 68. This middle assumption of 15.5%. Guys, if I bought 30 or 40 companies with this kind of assumption, I'm probably going to do okay. I'm probably going to do very well. It's hard to find 30 or 40 companies with those kind of assumptions when the market's still up. But I look at this thinking, okay, this is a risk I'm willing to take. The juice is worth the squeeze. I might not be right on Nike, but if I do this on 30 or 40 very large companies, I will probably be right enough to make an outsized return. And that's all we're trying to do here. And if there's a big bear market, Nike alongside with everything else will probably go down even further. Does that make me wrong? Depends how you look at it. I don't think so. Guys, there's many videos where a stock has skyrocketed. Look at Intel. I've owned Intel. And I keep telling people, this does not make me right on Intel, it being up 3x in the last 1 year. Zero, not at all. Being in the profit doesn't make me right. I have 2 companies I sold for a profit, and I was like, oh my God, I was so wrong. I got lucky to sell out of a profit. This is the way I want you guys thinking in this world. Bitcoin, that's what every Bitcoiner lives off of is, oh yeah, it doesn't work. It was 17,000 6 years ago. Now look at it. I'm like, okay, then you're right. All right, let's see what else is going on in the markets here, because a lot of active stocks here. Adobe, Apple. Oh, Apple's down $6. That's interesting. Meta's at a big, look at this, guys. Look at Meta. Meta was $800 a share in August. So what is that? 7 months ago, 8 months ago? Something like that. $800 a share. Now it is $570. It's getting interesting because when I do my stock analyzer on Meta, I just did it today. Where is that? I just did it today. Let me do my 9% return. I did my 6, 9, and 12%, which by the way is lower than the analysts out there. I did my 28, 32, and 36% free cash flow and profit margin, a PE of 20, 23, and 26, and my 9% return. Hit the analyze button. I have a low price of 505, a high price of 1250, middle price of 800. My middle price is higher than its all-time high. Is Meta still a value play right now? It might be. Now, my threshold for buying a company is a lot higher than it used to be. I used to want 12 to 13%. Now I want 15. Why? Because I got real estate, I got businesses, I've got plenty of other ways to make money. I want to be picky, and I'm dollar cost averaging every month into low-cost ETFs. I want to be pickier as time goes on. Look at this. Now the Nasdaq's only down 0.27. Will the market finish up? How many minutes we got left? We've got 10 minutes left, guys. The market's making a comeback here, baby. The market is making a comeback here. This is incredible. I mean, this is what happens, guys. The NASDAQ was down 1.85% today. Now it's almost even. Is that rational? Use the market's irrationality to your benefit. That's all we're trying to do in this channel. The hard part is, if I were to say to you right now, if stocks fell in half tomorrow, would you buy? You'd be like, fuck yeah, I'd buy. And then when it actually happens, all the news as to why it's down 50% would get in your head. You'd be like, oh my God. That's why you need to be on this channel. That's why you need to be focusing on this. We will be the voice of reason along the way. I assure you of that. Because every past bear market looks like an opportunity. And to us, every future one looks like an opportunity as well. But everybody else thinks the future ones are a risk. And they could be a risk depending on the situation in life, right? How are we doing here? It's climbing back, Tim. It is climbing back. The NASDAQ, the S&P, the Dow still has a ways to go. Come on. Oh, it's climbing, Tim. So guys, I want you to do me a favor. If you're new to the channel and you believe in some of the things I'm saying, but you want a little more detail to it, we have a great PDF about principle-driven investing. This is the way in which I think. It's 5 tenets of how I think. We are investors, not speculators. Every investment is the present value of all the future cash flow we'll get. If we don't understand it, we don't buy it. In the short run, the stock market's a voting machine. In the long run, it's a weighing machine. And the fifth, the most important one, a great story becomes a bad investment if you pay the wrong price. We have an absolutely free PDF that explains all of these to you, lays it out for you, explains it. I highly encourage you to have it with you. When markets are extremely high and irrational or extremely low and irrational, you need these tenets to remember. If you want to watch our channel over and over, we're going to talk about these until we're blue in the face. This channel is dedicated to price versus value. If that makes sense to you, please download the PDF. It's absolutely free. And guys, don't forget, the new quarter is here. So earnings are going to start coming out, and we like doing earnings releases. We don't focus on them in the sense that I'm not making buying decisions usually because of them, but it's a fun thing to do. We talk about the companies, they release their quarterly information, and they guide in the future, which we just love doing in general. Thank you for your time.